Are you ready to try your hand at placing your very first stock trade? Then check out our free guide, 10 Steps to Choosing Your First Stock to Trade, the Ultimate Beginner's Guide. In this free download, you'll learn how to choose the right kinds of stocks and how to find them, know when to buy your stocks and when to sell them, and you'll learn how to take your very first steps to becoming a stock trader and much more. Grab your free guide now by going to TRADEway.com/guide. That's TRADEway.com/guide. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hello everyone, welcome to our podcast. Today I want to talk to you about why some people tend to do better at trading than others. So first, let's look at a few contrasts between the way pros trade and the way amateurs do it. A pro tends to look at the facts, and an amateur goes by his or her feelings. What kind of facts do they look at? Well, for one thing, they got a big staff, so they send their staff flying out across the country meeting CEOs of the companies they're going to invest large amounts in. So they kind of go by, bet on the jockey, not the horse. So they're going to know that management team. They're going to want to love that management team and think they're awesome and that they can take this company to new levels. Secondly, does the company have great products? Do they have some new products in the pipeline? What about competition? Are they positioned well to handle the competition or even eliminate the competition? And they're going to understand the markets that this company has to sell to. So that's a lot of facts, isn't it? And so when they make an investment in this company, they're probably going to hold that thing for quite a number of months, if not years. Now, the amateur goes by his feelings. He's reading news. He's reading all kinds of news put out by who knows who. He's listening to his neighbor. He's listening to his mom. He's listening to his stockbroker. He's paying attention to a newsletter sent out via email by some guru, right? And he's got all these things in his mind, and it creates a feeling of what he feels like the stock's going to do, and he buys or sells based on that feeling. That's the difference. The pro uses facts, the amateur uses feelings. All right, now the second contrast is this. Pros tend to write the news, and amateurs believe the news. What do I mean by this? Okay. What the professionals do is they understand there are young journalists out there who need stories. So they will float a news story out there because they know they need the story, and they'll spin the news to their advantage. For example, I've seen, if you just go out to Yahoo Finance and you start reading news on, the economy or the world situation and how it affects Wall Street. One time I saw an article that said this: the market is moving down today due to the strength of the dollar, and then this long article, right? Well, probably 9 months later, out on Yahoo News, Finance News, I see this article. The market is moving up today because the dollar is in better shape. Well, how can this dollar being strong make it to go up one day and down the other day, and that's a fact, you see? So that's just people spinning the news to be positive or negative based on what the big boys are planning to do on that day. So then, you might see an article like this. Well, the hiring numbers look great today. The economy is hot. And this is bad news because it means the Fed is more likely to raise interest rates again. So here you see an example of where good news actually becomes bad news. And you get so confused as an amateur reading this stuff, and really the pros are putting it out there and spinning it to their advantage. The amateur is reading it and believing it and acting upon it, which is exactly what they want you to do. So when they get you to believe that that market or that particular stock's about to go up and that you need to buy a bunch of it, guess who you're buying it from? You're buying it from the big boys who are actually selling it. And then when you think you need to sell, guess who's buying it? The big boys, because they're ready to buy some more stocks or more positions in that stock. So they've got you doing the opposite of what you ought to be doing because you're reading the news that they're putting out there. All right, here's another contrast. The pros manage their losses. In other words, they focus on the risk. Amateurs, they focus on the possible gains. They focus on getting rich. Okay, that's a big difference right there. And then let's look at another one. The pros pick their own stocks. Amateurs listen to what other people think would be a great investment. All right, another one. Pros tell their broker what to buy. Amateurs buy what their broker says to buy. Now, it's not always your broker. I understand that now because, we can trade on the internet. But it could be newsletters that you're getting through the email that you purchased by some guy telling you what stocks you ought to be buying. And let me tell you, most of the time, 9 times out of 10, I'll bet you, they are listing these things that we call value stocks, and those aren't even the best stocks for you to be trading. You should be trading growth stocks. They're not even providing the right list, okay? So you act on what they're telling you to buy when you really should be picking your own stocks. Now, here's another one. Pros tend to set up systems, in other words, rules, before entering the trade. They do this to manage their emotions. You can't get rid of human emotions. All you can do is manage them, but they do that very effectively, while amateurs act upon their emotions in real time. Now, what do I mean by that? Well, when they're thinking about trading, they're thinking they're going to keep the rules. But once they get into a trade and time is moving and the stock's going up or down and the news is hitting and everything's changing, then they act on their emotions. So in the middle of the battle, that's where they get emotional and they make the wrong decision usually. So how do you deal with all this stuff? Well, let's go back to the top and let's think about this a minute. Pros go out there and they look at the management, the products, competition, and so forth. You're not going to be able to do that because you can't afford to hire a huge staff and fly them all over the country to go do that. So that's why TRADEway exists. If you go out to TRADEway.com and you take advantage of the educational products and services, they're going to include things such as a basket of stocks called the founder stocks. I'm the founder, right? So I'm picking these stocks, and they're reviewed all the time to make sure they're fresh and they're the right stocks. So they're going to be growth stocks. That's the kind you're looking for. And you're going to get these 2 baskets that have about 100 stocks each from, it varies a little bit from time to time. And you can just choose from that. And you can be sure that we've gone in and made sure the fundamentals are great on these companies, or they wouldn't even be in there. So you can just mark off the fundamental analysis, and we do that for you because, listen, you don't have time to do that. You need to focus on the things you can get really good at, such as technical analysis, seeing these patterns. And we'll talk about that a little bit more in a minute. But that will take care of that problem for you. Now, what about this where the pros write the news and the amateurs believe the news? We're going to help you with that too, because the hardest thing to get good at, I think, is what we call the market tone. And I think it takes years and years of trading through different bull and bear markets and reading the news the whole time to figure out what news is fake, what news is real. There's usually only 1 or 2 or 3 at the most news items that even affect the market, and all the rest of it's just junk. Well, how do you learn all that? Well, like me, you just take 40 years of doing it. But if you're new, you don't have 40 years behind you. So what do? You go out to TRADEway.com, you take advantage of our educational products. They include this thing called a market alert. And the market alert is going to tell you the important things in the news that are real, that really affect the market, why they affect the market, and even the news articles that we're looking at will be provided to you so that you start learning what kind of news articles to look at. So over time, you can learn to get good at it, but it may take you 3 to 5 years. And during that 3 to 5 years, you can have potential to make some great trades by just using this information that we're providing for you in the market alerts. Man, it's fantastic. I wouldn't be a new trader and try to do this at all without that kind of help from TRADEway. All right. So what about this when the pros manage their losses and amateurs focus on possible gains? So the pros are looking at the risk in a trade. The amateurs are looking at how much money am I going to make? And so how do you fix that? Well, when you go through our education, we teach you how to deal with, number one, managing losses. You use stop losses, and we teach you all how to do it. I mean, it's not hard to do, but there's a lot of information you need to understand about how it works, and you need to place those stop losses in the right way so that you can manage your own emotions for one thing, and stop focusing so much on what you're going to make and focus more on what happens if the play goes wrong. Can I afford this loss? We don't even call them losses, by the way. We call them expenses because they're just about the only business expense you have in trading for a living, right? So they're expenses, but how do you manage those? You do it with great stop loss procedures. And we're going to teach you all about that. And you do need to focus on the gains too, because think about it, it's all about risk return. So you wouldn't even do a play, if you had an opportunity to lose, say 30% if it goes wrong, but you could only make 20% if it went right, you wouldn't even do that play. So you do look at the possible gains, but not from a point of view of greed, just from a point of view of math. And if you have a chance to make 30, 40% on that play, if it does what you think it's going to do, but you're only going to lose 10% if it doesn't, that's a good play. So you're going to look at both, but you don't let the desire for riches cause you to make certain trades, because think about it. If you're trying to say, well, I got to have $8,000 a month to even make this work, now you're out looking for trades rather than just accepting the great trades that come your way. You see the difference? So you don't want to reach for a trade because it may not be a good one just to make money. That's not how this works. The trades will present themselves to you in their own good time, and that's when you jump and you take advantage of it. A little bit different way of thinking of it. And what about this? The pros pick their own stocks, the amateurs listen to everybody else. Well, you won't have to listen to everybody if you've got our founders list, because it's going to have a couple of lists with 100 stocks each, and you get to pick. All the fundamentals have been done for those, and they're growth stocks, which is the right kind for trading. All you need to do is go through there and pick your stocks. So you'll be picking your own stocks from there. And then what about the part about setting up systems? We're going to teach you the systems. We're going to teach you how to set up a trade, how to think about it before you get in it, how to know when the perfect entry point is for a certain pattern, where the perfect exit point is for a certain pattern, how to recognize the patterns, how to draw support and resistance lines. All of that's included out at TRADEway.com in the educational information. You need to take advantage of that first and foremost and get that behind you, okay? But now let's look at some of the emotions that do have a bad effect on amateur traders. First of all, greed. Now think about that. What does greed cause you to do? So you got in this particular play at $50 per share, and you got it for $5 a share because you bought the call options. So you got 10 times the number of shares, so you can leverage now, and that thing goes from $50 to $58, which is the high that it's been hitting as it rolls up and down and up and down. And you say, well, I just heard some great news about this. I think it's going to keep going up, so I'm going to stay in it. And sure enough, it bounces right down off resistance, drops $5 in a matter of hours, and you lose your profit because you didn't go by your sell rule. Your sell rule should have told you to sell it just a little bit shy of the resistance line, but you stayed in it because of greed. See, that's how greed affects you. Now, none of us think of ourselves as greedy. Only our neighbors know we are. No, I'm kidding. Maybe our spouses. But you know what I'm saying? We don't look at ourselves as greedy people. So maybe you don't even think of it from the point of view of biblical greed, but it is kind of the same thing, because what it is, it's this desire to get rich quick. And you might even not be aware of it, but it will cause you to stay in a play longer than you should. So you need to know where you're getting in the play and exactly where you're going to sell before you even do the play. Now, that's how professionals do it. That's how we want you to do it. Now, what about this idea of pride? There's another emotion, isn't it? Okay, pride works like this, in case you want to know what that looks like in the stock trading world. So you're just starting out. You've done your practice trading. You've done your small money trading, and now you're going to trade with about $20,000, and you've told your spouse, you know what, we're going to put $20,000 in this trading account. I'm going to make us rich. And you start and you do your first play, and it's one you're really good at. You're doing a rolling stock. It bounces up off of $20 per share. It's going to go up about $4, hit resistance and bounce down. So you buy the call option for $2, and you get 10 times the number of shares that way. So now you got 1,000 shares you're controlling, and that thing goes up to $3, it goes up $4, and all of a sudden it's at $25 per share, and it just short of your resistance line, so you sell it and you make your profits. And you say, well, this thing's rolling, so I'm going to buy some puts, and I'll make money on the way down. So you buy the puts, the stock's at $25 per share, it goes down to $24, and all of a sudden it bounces up $2 the next morning, and now it's $27 per share, and your put is losing money. Well, pride doesn't want you to tell your spouse that you actually had to stop it out and lose some money. Now, the truth is, you just made several $1,000s on the up move, and that's in the bank. And now you could lose maybe 500. Let's say you made about $3,000 on the up move. Now you might lose $500 because you have to stop it out. So you still made $2,500 on those two plays. You could go tell your spouse you're a winner, couldn't you? But you don't want the spouse to think you ever lose at all. So you don't want to tell them about a stop out. So what do? You tell yourself, well, surely it'll come back down. It always does bounce down off that resistance line. It'll come down tomorrow. The next day it goes up another dollar. Now you're losing $700 or $800 on your stop out for that put. Well, now I can't afford to tell anyone that it didn't work like I thought it would. See, what is that? That's pride, isn't it? But you stay in it, and all of a sudden it just expires worthless, and because you got like a deer in the headlights, and you never even sold the put, and you lost the $3,000 you made on the up play, and now you go tell your spouse that you're a terrible trader and you quit. See how that works? And really, you weren't a terrible trader. You just acted on your emotions rather than stopping it out like you told yourself you would when you first got in that put play. So listen, if you just keep these basic rules and you use those kind of systems and you set up that system before you get into the play and then you do the system, you will be a good trader. So you'll never quit because you won't be thinking you're terrible at something when really it's just like you let your emotions get the best of you. So those are some great examples about how you can handle these things. Now, here's another one. What about fear? Let's talk about fear in general first. Fear in general works like this. Let's take that same $20 stock, and let's say you're going to buy the call option for $2 a share, and you're going to spend $2,000, and you're controlling 1,000 shares, and that stock moves up just like you thought it would, and it goes up $1. So now you're already making $1,000. Now, you told yourself that the resistance line was at $25, and you need to sell that thing just short of that. So when it gets to 24, you'd sell it, and you'd make $4,000 profit. That's your goal, right? If you stop it out, you might lose $500. So that's a good risk return. So you get in the play. Now, as soon as the play goes up $1, your goal was for it to go up $4 per share and then sell it. As soon as it goes up $1, you start seeing that $1,000 in your bank account, and then you get fearful that if you stay in it tomorrow, it might tank, and you have to tell your spouse that you lost money, and now pride gets involved. So now you've got pride and fear working on you, so you just sell it and you take your $1,000. So what did you just do? You let fear tell you to sell before you should have sold, because here's the principle. You need to win big and lose small. So if your goal is to have a 10% loss if it doesn't go your direction, and to have a 30 or 40% win when it does, but to get the 30 or 40% win, you got to let it go all the way up to the resistance lines. It might take 2 weeks of going up and down, up and down, up and down. It meanders its way up to that line, and then you sell it and make your money. But you're not willing to go through all that up and down because you're fearful. So as soon as you make $1,000, you sell it. So what did you do? You just won small. So now you got $1,000 on a play that had you lost, you'd lost $500, or you might have lost $800. So you're kind of break even there. And if you trade like that for a whole year, you'll end up making nothing. You'll just basically break even, end up paying commissions, so you lose money. And so you're letting fear control your trading. You don't let fear control when you get out of a trade. You let your system and your rules determine that, the ones you set before you got in the trade. So if it says you're going to sell at 24, you don't sell at 22. You see my point? You don't sell at 21. You wait for it either to stop you out or to hit 24. So you have 2 times you're going to get out. If it goes the wrong way, it's going to stop you out at your predetermined stop out point. If it goes the right way, you're selling at 24 on this academic example. And otherwise, you just do nothing. You watch it, and you don't let your fear control you. And the last thing you want to do is start watching a 1-minute chart on that stock for the next 2 weeks. It will scare you out of the trade every time. So once you get in the trade, you don't need to watch it. You just need to kind of maybe look at it 4 times a day and make sure it's not tanking because of some bad worldwide news article that came out and tanked the whole market. You would want to stop out of that early. And you have permission, that's an exception to the rule. I mean, if there is a worldwide event that is tanking the whole market, sell it and take your $1,000, right? But that hardly ever happens. So don't let that affect you. You're going to stay in it till it gets to 24, no matter what, or it's going to stop out. And, there's ways you can move your stop out kind of in a trailing fashion where it would capture that $1,000 and still allow you to stay in the trade too. So we'll even show you how to do that. It's called a trailing stop loss. So that's sort of a scenario of how general fear can affect you. Now, what about fear of opportunity loss? That's a different kind of fear. How would that affect you? Well, okay, so you see this little stock and it's rolling between $20 and $25 per share. And you didn't really catch it right when it bounced up off the $20 mark and jump in it at the perfect buy point. It's already up to, say, $23 per share. And you say, well, but I know what the thing does. So I can still make $1 a share if I jump in it now because it's going to go to 24 and then I'll just get out and take my $1,000. And so now all of a sudden you've got this fear of losing the opportunity of making the money on that play because you missed the perfect buy point. So you buy it at a bad buy point. And if you did that for a year, you're going to end up losing a lot of money and thinking you're a terrible trader. So never get in a trade that's beyond the perfect buy point. If it's halfway up the range or a third of the way up even, that's too far. You need to skip it and just wait for it to roll and catch it next time. Don't get in it this time. But your fear of opportunity loss, you call that an opportunity cost, like you're thinking, well, what kind of money am I going to lose by not getting in this play? Cause you to get into a play at the wrong time, and that hurts a lot of amateurs too. So there you go, guys. I mean, there's a pretty good description and some good detail for you on why some people trade better than others. It's because the ones that do well keep the rules that they themselves established based on the education that they probably got out there at TRADEway.com. Okay, guys, I enjoyed spending this time with you. I hope you enjoyed the show. And if you did, please rate and review it. And that way people with similar interests can find it. We can be a help to them too. And we will see you next time.